Financial Planner. Follow us on YouTube.
Strange, the Rothschild dumps a huge amount of U.S. assets. Let's get into the economic collapse financial news. Now, ADP came out with their U.S. economy report, and they're saying that there was about 237,000 jobs added in August. And also, we need to remember they only expected 185,000, so there were a lot more jobs that were added. And they went back in time and they revised the July numbers, and they did an upward revision. Now, what we're looking at right now is the manipulation is continuing. That has not changed whatsoever, and they're continually manipulating these numbers to make it seem like the economy is doing a lot better than it really is. So basically, what we are seeing is that the BLS, the ADP numbers, they are still being manipulated to make it look like the economy is doing very well. And we need to remember a lot of these jobs, well, they're the food service part-time positions, and we can see right now with all the retail stores that are closing and all these people losing their jobs, and manufacturing, which is in trouble, even though they're telling us there's a lot of manufacturing jobs that are added. Well, think about this for a second. The auto industry is in trouble. They are in trouble, and they can't channel stuff to lots anymore. And to tell us that manufacturing jobs are increasing seems a little ridiculous at this time. Now, we understand that many different sectors within the economy, well, they're completely falling apart. And we know one of them is housing. And we can spot a bubble a million miles away. Even though the Fed and everyone else is saying it's very difficult to recognize a bubble, well, bubbles are not that hard to recognize. And what we're seeing right now is that there are many bubbles forming in the housing market. And a lot of people say, well, how do you know there's a bubble forming in the housing markets? Well, we looked at some information, and we can find that in certain cities, and remember, bubbles happen locally, we can see that bubbles are forming. Now, once the index hits around 200, well, it's telling us that there is a bubble forming. When it gets very close to 200, we know it's on its way. Now, if we go back to Housing Bubble 1, and we look at some of the cities, like, for instance, Boston, that was at 180. So, Housing Bubble 1 was at 180, and Housing Bubble 2 in Boston has already hit a 200 index. So what we're seeing is a huge increase, and it's far above the housing bubble of 2008, 2007, 2008. If we go ahead and we look at Seattle, well, they were looking at a 190 index, and that was housing bubble number 1. Seattle is now at 230. That is housing bubble number 2. So what we're seeing is that the percentage of these bubbles, they have increased dramatically. Look at Denver, for instance. Housing bubble number 1. It was over 100. It was approaching 140. Actually, it hit 140. And now Denver is at 200. Way above, 43% above what it was in housing bubble number 1. If we go to Dallas, we see the same thing. They were at like 125 or so. Now it's at 180, a 42% increase. So those individuals who say that you can't spot a bubble, well, a bubble is very easy to spot. And we see that these bubbles are much, much larger than they were back in 2007, 2008. The prices continually increase. And we know that Case-Shiller monitors these different cities. We know that they've been pumped up, and we can see that these bubbles are definitely forming. Now, we see that the second quarter GDP numbers, they've been revised sharply higher to 3%. Now, this is the best in 2 years. I mean, it's just unbelievable. All of a sudden, GDP is skyrocketing. I mean, there's a huge amount of manipulation going on right now, and they're trying to make us believe that GDP all of a sudden got a lot better. With the debt rising, with automobile and manufacturing slowing down, retail stores closing, consumer spending declining, and we know that a lot of the GDP is made up of retail, and that has been declining, but the GDP numbers are going up. It makes no sense. Now, something very, very interesting, that the big bank bosses, they are dumping their stocks. Now, this is very interesting because they kind of know what is happening in the economy. They have this inside information, even though they'll never admit to it. And these executives, they have been dumping a lot of their stocks. Now, the too big to fail banks like JP Morgan, Goldman Sachs, Morgan Stanley, well, what do we see? We see them dumping stock. And they must realize that as the economy moves up, there is a period of time where the stock market, as the stock market moves up, they're realizing that eventually what's going to happen, and it looks like it might be coming very soon because they're starting to dump what they have. I mean, they have a total sold net of about 9.32 million shares at the open market since the turn of the year. So they realize that, yeah, it's not good for them to stay in the market because they understand and they realize that it will be coming down. So what are we seeing right now? We're seeing all these bubbles in the market. Student loan bubble, automobile loan bubble, housing bubble. I mean, this is starting to look like a complete repeat of 2008, but these bubbles are much larger. They're much bigger than they were before, which tells us that the crash is going to be that much bigger. And we're already seeing signs of this, where there are many people out there who cannot sell their homes. So the numbers they're throwing at us actually don't make sense. Now, there is another indicator, the Rothschild Bank. And this is the RIT Capital Partners. And Lord Jacob Rothschild, founder and chairman of RT Capital Partners, they have minimized their exposure to risky, unstable U.S. capital market. So in the half-yearly financial report for the RIT Capital Partners, they explain that the company's aggressive moves to significantly reduce exposure to the U.S. assets because they believe that QE, quantitative easing, well, that's going to come to an end. Central banks are going to pull back. And really what they're saying is that this economy that we're in, this global economy that we're in, it's going to come crashing down. And we can see that this is definitely what's going to happen. And it is going to be a complete and utter disaster. So we're getting a lot of indicators, not just economic indicators. We're getting indicators from the insiders letting us know that something is going on here. And this is why we've been saying for a very long time that you need to be ready and prepared, because believe me, a lot of people think that, oh, don't worry, this economy is going to continue on. We don't have to worry about it. Nothing's going to happen. Nothing will go wrong. And I'll be okay because nothing has gone wrong for a very long time. Well, when it does go wrong, what are you going to do? Are you going to go and look back in time and say, oh, I should have done this? Well, it's going to be too late. You're not going to be able to get food. You're not going to be able to get water. Most likely, you won't be able to take your funds out of the bank. You'll have nothing to ensure your wealth. And just because something has been going on, which has been manipulated for a very long time, doesn't mean it's going to last forever. What we have been following all these years is to show how this economy is slowly grinding into a crash scenario. It doesn't happen overnight. It takes a very long time to blow these bubbles up, to make people think that the economy is doing well, to get the majority of the people into the system. This is how the central bankers work. They don't just want to crash the economy. They want to steal your wealth. And if they can't make you believe that the economy is doing well, you're not going to invest in the stock market. You're not going to go out and purchase a house. You're not going to take out a student loan. This is what they want everyone to do. And this is what they've done over the many, many years. And now we're reaching that point where things are coming apart. I mean, we've been following it. I mean, look at what we've been looking at. We've been looking at housing. We've been looking at retail. They're falling apart. Things are rapidly deteriorating very, very quickly. They had to keep the interest rates near 0%. They really couldn't push them up any further than that. They offloaded inflation into colleges, into medical insurance, into housing, into stock market, into other areas around the world to make it look like there's really no inflation here. The dollar is stable. The whole thing is one gigantic illusion. It's the same illusion back in 2008 when they told everyone the subprime securities were perfectly fine. They're AAA. There's nothing wrong with them until people looked inside and said, well, wait a minute. You're telling us they're AAA, but why are all these people defaulting? This makes no sense whatsoever. And the same thing is happening right now. And this is why everyone needs to be ready and prepared for what is coming, because it's going to happen in a split second. And it might happen in a couple phases. It might happen all at once, but it will happen. And it's going to, catch a lot of people off guard, and they're not going to know what just happened here because they were in the frame of mind that this economy has been fantastic. And then all of a sudden, their entire world is going to fall apart, and they're not going to know what to do. So everyone needs to be ready and prepared.